Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers. Under Armour is an American sportswear company that manufactures footwear and apparel. Their most recent earnings report on November 8th posted quarterly earnings of 24 cents per share, beating analyst expectations of 21 cents per share. But their share price has been pretty volatile recently. So today we are asking, is Under Armour worth investing in? Welcome back to Stock Investing from Zero on WangHiro. I'm Louis and my co-host is John. This is a series where we put a beginner's lens on companies to help you decide if you should invest. We do this by asking 4 questions. Number 1, what do they do and how do they make money? Number 2, are they profitable and financially stable doing it? Number 3, who is their audience and how big can they grow? Number 4, are they cheap or expensive? So John, let's start with the first question. What does Under Armour do?
The founder of this company, Kevin Plank, used to be in the locker rooms of the NFL football players. And what he did was he was picking up shirts, the jerseys of a lot of these football players, and they were soaked to the T. And a lot of these players are complaining that the shirt doesn't actually soak up enough sweat. So he saw the problem. He figured out that there has to be a better way or better material to actually create this kind of textile to be able to absorb sweat at the same time feel light. Because like I like cotton shirts for the texture, it's comfortable, but it doesn't absorb sweat very well. It soaks up and then it becomes heavy, really, really heavy, right? So that's where Under Armour really started, and they've since branched into shoes or whatever. But today, what they do, it's I would deem it somewhat an athleisure kind of company. It sells shoes, it sells sportswear. I think, for the lack of a better word, sportswear. So it's more general, both men, both for women, and they've got pretty interesting lineups of people or sports characters that actually support or their ambassadors. Stephen Curry is one. I don't know if you heard of Stephen Curry.
Yeah, Stephen Curry. I heard it from my nephew.
Yeah, legendary 3-pointer. So he's an Under Armour ambassador. And for the ladies, I'm not too sure who they got as that one. Yeah, but I think Stephen Curry was one that sticks with me for Under Armour. So that's how they make money, by selling, sports apparel, everything in it, including footwear, athleisure wear. I don't know whether they sell ski equipment. I don't think so, but they even now sell bags, gifts, gift cards, a lot of things. Yeah, but if you were to draw parallel, I would say somewhat like a Nike already.
Oh, really? I thought they were more niche than Nike.
They're definitely, actually, that's where the struggle is today, Louis. Like you mentioned earlier about where the share price volatility is. It started off with trying to solve a problem of sweat.
Okay.
And now they've branched into so many things. They're actually having an identity crisis. Where do they want to be? Do they want to be a Nike, which is like everything? Or do they want to be like Essex, which is more known for, like Essex is very, very niche. It's more for running shoes rather than anything else. They don't do like bags or whatever. It's really like their key or their core product is running shoes. The problem Under Armour is like, what are they? Is it really the wig shirts or actually the shoes for Stephen Curry? So, and then there's another one. I don't know if you heard of this brand called AND. If your nephew is a basketball fan.
Yes, I heard. I mean, this brand is quite old, right? And
then they died off. They faded off. And I was just watching the Netflix documentary about them.
Oh, okay.
Yeah, it was actually famous because of street basketball. And
okay.
Then after that, it just I don't know whether.
I think that was actually famous when I was in secondary school or something.
Correct. Yeah, I don't know whether they're still around. Oh, they still are. Okay, see, look at the shoes. Very, very.
I actually now that you open it, I actually remember I actually did buy before. Yeah.
Yeah, it's quite cool. Look at it, retro. Wow.
Back then. But okay, at least retro is making a comeback. So,
Yeah, look at this, man. This was the Reebok pumps of the world. During our time, Louis, I don't know if you remember, Reebok still had pumps. Reebok pumps.
no, I don't
Puma
remember.
this. Oh my god, Reebok pumps. Have you seen Reebok pumps?
I know N1 I bought N1 shoes before. Oh, I didn't know they were popular. I just bought it because it looked nice back then.
Yeah, last time Reebok used to have this kind of shoe, Louis.
Oh.
So you see this basketball over here? You can actually, there's a valve and there's tubes into the shoe, and you actually
now I remember. Yeah. I remember.
Yeah.
All the commercials before.
Yeah, the younger generation today, I don't think they've seen this before. This was like classic, man.
Classic. Yeah. I think but the style is quite trendy these days, I feel like. All the retro styles.
Correct. Yeah. So
it's interesting because whenever I think about Under Armour, I can't really pinpoint where they are.
Yes.
That's the problem. Yeah.
That's why you're spot on. I think that was the crisis that the company faces today. And what's interesting is they brought in a hotel executive to be their new CEO. Yeah, she's ex Marriott. Okay, she's ex Marriott. And she's trying to, because you see the struggle for founder-led companies is that they usually have a certain vision for the brand. But sometimes the founder may not be a suitable CEO to take it to scale, you see. And Kevin Plank himself, he's mired himself in a bit of a controversy as well. So he had to step off the role of a CEO, front-facing CEO. The board, and today he's executive chairman. So they brought in this lady from Marriott. I can't remember what's her name. I was just reading about her. Too many names, Louis. New CEO of Under Armour. I was reading the Fortune article about her. Yeah, Stephanie Linnartz. So she was a former president of the Marriott Hotel, and she was actually next in line to be CEO of Marriott, but someone else got picked. And when Under Armour came knocking, so she went to take over. So it'll be interesting because she's from the hospitality line, and ironically she's a runner and she's also a football fan. So American football. So perhaps she has a very good perspective from a third party, from an outside observer, and then hopefully she can turn around the company.
Yeah, sometimes you just need that fresh perspective into the company, right?
Correct. Yeah. So the next question is, are they profitable and are they financially stable doing that? Okay, so let's look at Under Armour. Under Armour. Here we go. Okay, so Under Armour, if we look at the finances, so let's drag it. So listed quite some time ago, 02, so most likely they were listed in 04 or 05, okay. For the past 5 years, let's plot the revenue line. Kind of flattish, bad year during COVID, okay. Let's look at their profit on net income. They had a loss-making year in 2022, okay, which is expected. And if you look at cash flow, okay, wow. Can you imagine in 2021, they made 664 million cash flow. Last 12 months is only 56. So, wow. So, a bit of a struggle. Yeah, it's a bit of a struggle for them right now. Okay, let's look at the balance sheet. So, they have cash and equivalent of about cash total 650 million, 655 million. Okay, if you look at their debt, yeah, they're in a net debt position, not net cash, 815 net debt position. So for a company like this, I think my guess is, I've not read in detail, but my guess is they outsource a lot of their garment production, maybe to countries like China and all that, contract manufacturing, and they're more of a brand owner, product distributor, R&D. So the beauty of that modeling is that they don't have much capex cost for expansion. But what they do need to spend a lot on is definitely marketing, sales and marketing. So I wouldn't be surprised if that is a big chunk of their expenses. They didn't break down the R&D expenses, so we wouldn't know whether, how much are they spending to upgrade their apparel in terms of technology. Okay. Third question, a little bit more difficult to answer because, like what you said earlier, you don't know what's their niche, you know.
Mm.
Athleisure. Okay, so let's see athleisure.
I feel like athleisure though is I don't really see people like Lululemon. I do see like women wearing their jackets out even when they're not, exercising. But with Under Armour, is that the case, John? Do you see people doing
No, I don't see, especially in the Malaysian market, I don't see that kind of adoption yet. But Lululemon, like what you say, like yoga pants. Every time I go to, I sit by a cafe where there's a yoga center, whatever, right? Lululemon is very, very prominent, very prominent. Especially in
they're
the
very
area where I stay,
comfortable.
a little bit more,
Yeah.
they can afford it, right? Yeah. Sorry, I cut you off. What you was? What
I was just saying because it also looks nice. Right?
Yeah.
Outside of the yoga studio, it looks nice when you're sitting there also. But Under
Correct.
Armour doesn't have that vibe, I feel.
No, it doesn't. And even their shoe adoption, obviously their shoe are not up there with the Nikes or the Essex and all that. I don't see, even in Sports Direct, I don't see much of their offering, to be honest. Yeah. So,
They also like not really a fashion statement.
no. Yeah. So it's a bit all over the place, like what you said.
Yeah.
You know?
Shoes look very basic. Yeah.
Yeah. Looking at the shoes, if you look at, let's say, men's shoes, right? Okay. Jacket, sweatshirt.
Very plain and basic. Yeah.
Yeah. What's you need something that stands out, right? So
like if you look at Nike shoes, for example, you have all kinds of nice Nike shoes, right?
oh yeah.
All kinds, like Nike's a statement, definitely. Even if you're not, most people would say like the biggest segment is probably not the people who exercise with Nike shoes, is people who are wearing them.
Correct.
because
It's a fashion statement,
Yeah,
right?
it's a fashion statement. Correct.
Yeah, look at it. The variety for Nike is just insane. You've got basketball, you've got tennis, you've got wow. I didn't even have you seen this shoe before?
Yes. This came out, I think, a year and a half or two ago.
What?
It's like easy to slip in and out. Yeah.
Wow. Okay. I wouldn't mind getting a pair like this. It's easy. Right?
At this point, John, you really need a big shoe rack after this.
Yeah. I only have like 4 pairs of shoes actually. I realized I used to buy I think the most I had was 5 pairs of shoes, but cheaper ones. Then I realized I only wear the few
The same one. Yeah.
So yeah. Okay, the audience, okay, there is some stats of athleisure, okay. And right now they're looking at fastest growth. Okay, so this is a global athleisure market size report. I think they're looking at CAGR of about 6.16%. I don't think it's that big as a base, to be honest. Okay, let's see. 319 billion to 430. Okay, it's not small as well. Yeah, because I remember semicon market, it's about 500 billion. That's the entire, this is in the entire athleisure, so you're talking about everyone, including even Zara that may sell some kind of a sports apparel is also lumped in together into this, you see. Yeah.
It's rather tiny compared to other markets, right?
Yeah. So
very hard to understand.
Again, looking at, let's look at Nike. Let's look at Nike's numbers. Then we know, right? They're the market leader. Let's see whether they are growing.
They don't fit neatly into any of the verticals, I would say. Are they really a very, Essex, we know the shoes are great, but Under Armour, I haven't heard raving reviews like that about them.
Yeah. So you see, Nike is also getting some sort of a flat traction. There's some recovery, okay, coming back. But yeah, looking at it, I think it's not going to grow by leaps and bounds. You get me? It's not like a blue ocean kind of company where they open up a new market and then people start going gaga of it. Like Lululemon, it really did in a way.
Yes, yeah.
Lululemon
is quite different. I think Lululemon, the market is still so big,
Yeah.
Because of the differentiation is quite apparent.
Yeah.
But with Under Armour, it's just not apparent. What is the differentiating?
Yeah, I don't see any going back to Lululemon, right? Even people who go to spin class will wear yoga pants.
Yeah.
You see, and they may not even
not going to any class, they wear it. They even have dance pants. Yeah.
Oh, really?
Yes, they have dance pants.
Wow.
Yes.
Okay.
So imagine how big.
All right, so coming back to the last question, are they cheap or expensive? Let's look at valuations for Under Armour. Okay, we're talking about forward PE of roughly about 14 times. Okay, definitely not expensive at all. And trailing about 8 times, 8.5 times. So, I mean, unless and until you can find some value for yourself, that conviction about maybe there's a certain mode or certain unique specialty that Under Armour can trump the Nikes of this world. Yeah, I think this is rather, I would say, rather cheap kind of valuation, and they're cheap for a reason. They're cheap for a reason. Yeah, exactly. So you look at the past 10 years, the only time it went nuts was during COVID times. During the COVID bull run, but that's an anomaly. You notice? You see, even 10 years, you say 5 years, right? It's kind of like really, really flat. Oh, this is quarterly. Let's do annual. Then you can see 5 years. Yeah, it doesn't change much. Yeah, so the mean, you see, take the outliers away. The high is 4,000 something, the low is minus 1,000, last 14. So the mean is 100 times. Wow. Okay, it's still quite high. Last 12 months, also, wow, a bit of an outlier. So can you imagine, from negative 200 to like almost 100 times PE. Look at the band. But again, all these are outliers. I would assume anywhere between 8 to 20 times PE would be some sort of a fair valuation for an apparel company. You don't expect to pay premium for companies like this. Yeah.
Like I mean, just looking at how I mean it just seems to be plateauing for some reason, but then there's all these like management shakeups that's going on. They have a new CEO. They have a bunch of other new people in there. So do we like normally when this happens to a company, like we see a lot of new faces there. How does it influence how we evaluate this company?
That's a very good question. Actually, you see, I'll give you an example of an industry I'm very familiar with, which is the semicon industry. And Pat Gelsinger, former Intel, went out VMware and then came back Intel, and he dubbed, his vision was this thing called Intel 2.0. So brief context so you understand, Intel 2.0, in the past, Intel didn't manufacture chips for anyone. Unlike TSMC, TSMC is the factory of the world for everyone. NVIDIA, Apple, you name it, right? And Intel is like, nope, I'm going to safeguard my processors. It's going to be for in-house Intel processors only. So when Pat Gelsinger came in, he introduced this thing called Intel 2.0, in which Intel was going to open up their wafer fabs for other guys to come in. But the problem is this, you see, the problem is this, even though his promise sounds very logical and the right way to go about it, you are Intel, and when you are giving up the design, when someone is giving you the designs for you to manufacture, is virtually giving you the trade secret. And Intel has a competing product. Whereas for TSMC, they don't have an end consumer product. I'm in a way fair. I'm not going to come out, I'm not going to steal your designs and come out and sell as my own product, you see. So because of that, the nuances and the alignment is very clear in that. And why I use this example in relation to Under Armour and your question about new CEOs is this. They can come in promising a very enlightening vision, but does it make sense in the ecosystem or not? Does it make sense? So the only way, people can sell you 1,001 stories, but the only way is to judge through the action, and that takes time. You don't see it in a quarter, you don't see it in a year. Yeah, you may only see it in 3 years. And by then, you see, when you're investing, you're managing risk reward, okay? If he managed to execute and you got it at the bottom, fantastic. But what's the harm of him trying to execute and you see minor milestones being hit, and then only you put in money? You see, it's still not too late, because now you put in and his vision doesn't pan out within 2 years, then you've locked up capital for 2 years, you see.
True. I think that's like we have to give them time to prove themselves. Like this is a gamble, I guess.
Yes. And the way to play again, Louis, is this: maybe a very small allocation. Let him prove himself. That means maybe, let's say, if you run a big portfolio, maybe less than a 1% stake, maybe a 0.5% stake, And that 0.5% stake, if he really executes, then, so be it lah. But for me, here comes the nuance for Under Armour again. It's an industry that's not going to grow by leaps and bounds. You see where I'm coming from? So again, even if he gets everything, he gets firing on all cylinders, then I have to look at the market leader. Let's say the guys like Nike, then what kind of growth rate, Nike at the peak of their growth, what kind of growth rate are they looking at? What kind of income can they potentially bring, Then I mirror that to Under Armour. Probably this guy is going to be like 3 times the most, 3 times the way it is today. Okay, they capture like maybe a quarter of the market or half the market. So if that possibility is unlikely, right? I mean, we're not saying that it's impossible, but unlikely. Then you see, should you even allocate something big based on a promise of a CEO, you see? Again, CEO can execute on all cylinders, but the size of the market is only of a certain size. Again,
right.
So I think these are a lot of investing nuances that people don't think through, and I'm humbled every day because every time I learn something new, I'm like, oh my God, I didn't know that, and it's just this continuous nuances that we looked at, and it says, okay, another angle, another factor to consider. You see, so for me, if I were to simplify, you can have a very good CEO in a very small market, but he becomes market leader. Okay, but then growth has stagnated. So if you were to pay, you cannot be paying overly too much for a valuation that high. Okay, but you can be a small company, but an industry that's still very nascent and still growing. Okay, and the CEO may not be the best, but because it's still nascent and everyone is still trying to figure their way out, that is where maybe they can be king on the mountain in a very big market, and that's where valuations you can have. So again, no hard and fast rule to say 1 + 1 equals 2. It can be 1 + 1 equals 1.5, or 1 + 1 equals 4, kind of thing. Yeah.
So I have to consider, I guess, have a big picture view of everything, rather than looking at this one portion of the news.
Correct.
Okay,
and not only that, even if you get it wrong, what is the consequence if you get it wrong? Because you can have execution right, market right, but all of a sudden COVID happens, and then from there he never recovered. For example, maybe there's another possibility. But in this case, I think leisure market quite known already. I would say that's the factor, yeah.
Okay, that's very interesting, because I was looking at they've been very active, with changing all the C-level executives I saw, and I was like, okay, and I just wondered what would be the impact of it. Okay, so I think that covers it for all the Under Armour analysis. Hopefully our audience out there has gained some tips on how to evaluate Under Armour. So now let's look at our next section, which is an investing book recommendation from John. So every time I will ask John to recommend a book for beginners. So if you're a beginner like me trying to learn, here's a book recommendation from John.
Yeah, so today's book is going to be an Asian writer, which I nearly had a chance to meet in Omaha, Nebraska, but I missed him. Yeah, my friend managed to get to meet him, Thomas Chua of Steady Compound. Yeah, can you see the photo there? Yeah. So the author's name is Gautam Baid. He's just launched a new book as well, so we'll cover that in another episode. So this is his first book. It's called The Joys of Compounding. And I think the insights of the book that makes it very, very interesting is a little bit different. I would say most investing books will teach you what I call the hard sciences, meaning financial statements, how to look at it, business point of view, and all that. I think in this particular case, he's coming from his perspective of how he invests in the emotional need kind of angle. Very similar to psychology, the Psychology of Money by Morgan Housel. Okay, so he actually states a few things. One, he said investment in self-improvement rather than investment in the stock market is the first thing you should always do. Because if you don't do that, then automatically you disqualify yourself to invest in the market because you're not upgrading yourself. Okay, and he said, ironically, rather than understanding financial statements and financial hard figures, he said, to be a successful investor, please understand the psychology of human beings and human emotion first, rather than the hard sciences. Understanding people's behavior first.
Very deep.
Very, very deep. He said.
Mhm.
I think third insight that I thought was pretty insightful was how humble you are with knowledge. Like, for example, just 5 minutes ago, you asked me about the question about management and about how do we look at the market, right? There are 1,001 variables or permutations that any company direction. And it can come from either the management or either the ecosystem or where the market, where this company operates, which market. So the problem is investors take a lot of time to build what we call domain knowledge or expertise. But the moment you come to a certain level of expertise, there is always this very easy fallacy to fall into the things that I know it all. The struggle of an investor is always still learning, still be an expert, but still position themselves to humbly say that I don't know everything. So it's always this, you reach expertise, but then you said, nope, I know even less. And then you reach expertise in another field, I know even less. So it's a different take altogether, Louis.
Dunning-Kruger effect, right, John?
Yes, Dunning-Kruger effect. Correct. Yeah. Next, he says that while you have to understand financial statements, all this kind of like accounting rules, ironically, basic arithmetic, which is plus, minus, multiply, divide, is more than enough to understand investing. A lot of people, you see, a lot of people go in, and I'm very aligned to this because when I used to train students in investing, right, I always use this trick on them. It says, hey guys, you want to know the secret formula for investing, right?
Okay.
And then everyone takes out their pen and paper, ready to go, right?
Okay.
And then I'll just say plus, minus, multiply, divide, and then they'll be cursing me.
I cannot imagine. So I have to. If you ever tell me that, I have to just bother like.
So that part, I think, is actually a good encouragement to people who say that, oh, I'm not good in math, and okay. Last but not least, I think this is also very important, which I've not really done very well, actually. I have it sporadically here and there, but he mentions the need to keep an investment journal. So that means if we look at, let's just say Under Armour today, right? Where the company is, it has a multiple change in their C-suite. Their founder has stepped back from day-to-day CEO work and become executive chairman. They're in a niche, or they don't know where their niche is going to be. So you have to state in November 2023, this is the observation of where Under Armour is. And you decided not to buy it. Okay, like for example, okay? Then 1 year from now, the new CEO, Stephanie Lennartz, managed to turn the company around, managed to find a niche. Then when you write that journal, right, you are actually writing about the evolution of this company, because the company is a live, living being, And what the company was 10 years ago versus the company today, with change of management, change of culture, it can totally mean a different thing, you see. So I think that compounding of knowledge can be very, very much related with this maintaining of an investment journal, because what you know also have to evolve. So I found it very, very deep, very, very meaningful. Actually, I keep a notes on all my company visits, actually. So what I do is I have a folder, all the companies that I've read, covered, I dump everything in one folder. So the Under Armour, one folder, everything lah. An analyst report, my notes of the company visit. I don't have it systematically. Some people, they can like click and have a link there. Now with Notion, I started without Notion. I mean, these were the days when you don't have Notion, you don't have Evernote just first came out. So some notes are even all the way from 2014, 2014.
Microsoft had its own like OneNote or something.
Yeah, they had, but I didn't.
I think they deprecated it lah.
Yeah, I didn't have the conviction to actually sit down and learn how to use OneNote lah.
Too many.
Yeah.
Okay. So I think that's very interesting. I think today's book in particular really surprised me because usually we think about investing as like, you know, very hard science, right? And I think so far you have always introduced the non-investing hard science related books, or like biographies or business books, but today it's quite a different flavor altogether. So hopefully I also get to read this book one day. All right, so guys, that wraps up today's episode of Stock Investing from Zero. So hopefully you've picked up some tips on how to evaluate Under Armour for its investing potential. So over to you. Are you an investor or potential investor in Under Armour? What is your outlook on stock? Leave your comments below. If you've enjoyed today's video, make sure to give us a like, subscribe, and hit the notifications button for more updates. Thanks for tuning in today, and we'll see you again in our next episode. Bye-bye.